Thank you for the great introduction. Good morning, everyone. Welcome to the 6th annual Istanbul Fintech Week. It's always a pleasure to have you all here again at the 6th time. It is truly inspiring to see how far we have come in exploring the dynamic world of the digital assets. Over the past few years, digital assets have rapidly gained traction globally, with innovations such as tokenization, modernizing the way we think about investment and, of course, asset management. This evolution is now opening up new avenues for growth, making digital assets a cornerstone of the future financial landscape. As we look ahead, the potential for financial assets, I think, has no limits, has no boundaries. With institutional investments increasing and new regulatory frameworks emerging to ensure security and trust as well on the other side. And it is crucial that we understand how these regulations can pave the way for continued innovation and growth, creating a more secure and robust financial ecosystem. Today, we have the privilege of hearing from our experts who are at the forefront of all these developments. As our speaker mentioned, our esteemed panelists are Ali İhsan Güngör, who is very famous in Turkey nowadays, Executive Vice Chairman of Capital Markets Board of Türkiye, and Christine Abu Asil. She is the Policy and Regulations Lead at MENA Fintech Association and a partner at RAG Legal Consultancy. Both of you, welcome.
Thank you very much.
They will provide invaluable insights into the challenges as well as the opportunities that lie ahead in this exciting field. So thank you all for joining us today, and let's get started with our first question, if it is okay with you. I'm gonna ask 3 questions to both of you, but I'm sure that Ali İhsan Bey will answer with his regulatory perspective, and Christine, I'm sure that you have a huge global experience, as we talked earlier, with the EU perspective and a MENA perspective, so you're gonna answer with the global perspective. So my first question is, what is a fundamental principle or an unseen challenge that you believe is mainly influencing the way regulators are currently approaching to the digital asset regulatory? Something the industry might be underestimating. So maybe we can start with you this time.
Thank you. Here I am as a regulator, so I will do the boring part of the speech. Actually, 3 to 5 years ago, it was not easy to talk about regulating the crypto assets. But as we consider the digital asset or the crypto asset regulations have taken a long way, and we have already a more descriptive, more seeable sign when we look. So the challenge is visible enough, I think. We have reports that I mentioned previously, the Financial Stability Report, the ISCO, when we looked at the European Union, we see MiCA. So as a regulator, it's easier now to talk about compared to 3 to 5 years ago. 3 to 5 years ago, the regulators were very suspicious. There was a new instrument, and there were people buying and selling crypto assets. So we were responsible of the customer protection, investor protection. We were calling actually customers, not investors in those days, but nowadays we call them as investors. We have responsibilities to protect them. We had to do something, but our reflex, the usual way of doing business was going back to the traditional finance. But when we go back to the traditional finance and try to apply the rules of the traditional finance to the new industry, we were struggling with the sector, you know. That's why I say that we are the ugly face at that time. Somebody is saying innovation, climate, new climate, and as the regulators, we are saying, no, we are going to take you to the borders of the traditional finance. So, but thanks God, now we came to a clearer point. Actually, your question was the unseen challenge. Nowadays, the crypto asset trading platforms and other virtual asset providers clearly see the challenge. So the coming steps are very seeable and very predictable. ISCO, thanks to ISCO, they say the motto. In the morning session, I also told that same risk, same regulation. So being a regulator, if you have the necessary love and power, it became easier. Our motto is same risk, same regulation. So actually, the MiCA also has the same logic.
Exactly.
And actually, transforming the crypto asset sector to the traditional finance, but of course, not. This works both, not only one way. This works in both ways. Nowadays, when we are talking with traditional financial firms, we are talking more about technology with them, and when we are talking with crypto asset sector companies, we are trying to take them to the financial, the basics of the finance. You know, it's not a choice, but it's a must. So if we are responsible to regulate this area, and if someone is behaving as a stock exchange or an intermediary institution, a brokerage house, so it's very usual and acceptable to be in the side of the traditional finance. For this moment, I think it's...
Thank you very much, Lisan Bey. After all the developments, after all the firstly and secondary regulations, now you can say that in Türkiye we have identified the risks as EU did, as the other countries did, and now we can see the risk, and now we can try to regulate them, or we said that we regulated them, but we will see what will bring in the future. So, Christine, the same question to you, but maybe from other perspective, MENA perspective can be very insightful for us.
Of course, and thank you for having me, and thank you for introduction, Senem, and the pleasure to be sharing the panel with you, Ali. Thank you. So I think now the challenge, I don't want to say if it's unseen, but we tend to think of regulators thinking of, as an industry, I would say, will I get my license? They are to stop fraud. And while all this is correct, the regulators' role now I think is quite momentous, and I'm sure you're very busy, is bringing digital economy and tokenized economy into traditional economy. And this integration, which I think was mentioned before from the industry perspective, is really a very large task, because what the regulators do not want is to have regulatory arbitrage and have basically institutions act like banks and carry out activities like banks, but not be regulated. And this is where market stability will evaporate, and all what the regulators has done would evaporate. So what we see happening is that there is this work by the regulators to integrate structurally the fintech institutions and the digital assets providers, VASPs, into the traditional. With players, with custodians, with all the life cycle of traditional finance. What also we have is that, for example, in Abu Dhabi, in the UAE, we have various regulators. We have one regulator for the Abu Dhabi global markets, which is the financial free zone, and it's called FSRA. And FSRA has embedded the rules for digital securities and digital assets within its existing financial services regulatory financial services markets regulations, meaning that if you are a multilateral trading facility or you are a custodian of fiat assets or other assets, and you are one for virtual assets, you are subject to the same framework, of course, with changes that are pertaining to one or the other. And that way, like, you have the rules on margining and capital requirements also apply to you. There's also another challenge, which I think, like, within that integration is not talked about a lot, is also institutional readiness. So if the regulators is ready, but the judiciary is not ready, how do you enforce against, how do you get your assets recovered in a real estate tokenization, for example? So these are things that the regulators are having to grapple with, yes. As well. I'm conscious of time. I will stop for now. Yeah.
Okay, thank you very much. As I understand from your answer, you say that different types of regulations and different types of regulators brings extra types of challenges on the table. So it can be another challenge. And the maturity level of the institutions different from each other. So, I mean, a challenge can be a big challenge for one institution, but maybe not for the other one. So thank you very much. When we move to the second question, it's one of my favorite questions, I always ask it. There is generally a notion of constant tension between fostering innovation and ensuring investor protection and digital asset regulation, which I call smart regulation. Smart is a very smart word, so I use it, smart regulation or smart balance. So how do you think these two things, innovation and investor protection, these two things should be balanced in a smart way? Maybe this time we can start with you, Christine.
Sure. Thank you. And I also like the question. And the way I see it is that it's not a zero-sum game. So it's not having either investor protection or innovation. And this is where I think that the conversation has evolved since, as you said, 3-4 years ago. Is that now we have. You want them to reinforce each other, because if you have innovation without trust, this innovation cannot flourish, cannot be sustainable. So this is basically the thinking behind it. So what regulators are doing is what we're seeing is. The word used is smart regulation. Rather than over-regulating, they are regulating more smartly. And that is basically having a principle-based approach to regulation, so that if the technology evolves, the regulation can still apply. So there's probably fewer loopholes, but also for innovators, if their innovation is slightly different, it doesn't automatically become non-compliant because the regulator has not thought of it. Also, another thing within smart regulation is a risk-weighted approach. What we see, for example, in FSR, in the UAE and other jurisdictions, is if you are a digital wallet provider and the assets are held on self-custody, you are subject to different rules than if you are a digital wallet provider and you offer custody. When you offer custody, you clearly have a higher threshold that you need to comply with. And so the regulators are thinking in terms of what is risk here, and that's, regulate for it in that smart way, rather than have a blanket approach that applies to all in the same way, overburden some and stifle innovation. Another thing that we're seeing a lot in the UAE is regulatory sandboxes. And for example, in Dubai, there's something called innovation testing license. And in Abu Dhabi, we have ADGM Reg Labs. And these are basically, they're really to foster innovation and to create a control environment for innovators to test their products in a controlled manner. So probably the amounts at play are not that high. And the regulator is there also, it's a two-way approach, in also feeding into the regulations as well. Finally, I would say collaboration between regulators and the industry, and this today is a prime example of having regulator with the industry. And what we're seeing a lot is, like, for example, last week in Abu Dhabi, the Securities and Commodities Authority, we have a lot of regulators in the UAE. That's good for us lawyers. The SCA has published consultation paper asking questions to the industry, and so this is an opportunity for the industry to come at the table and discuss with the regulator, and not just go there when they need licensing. And regulators want that. They're also hiring technology personnel so that the regulator is also understands that language. So it's a two-way dialogue. I see it.
Okay, thank you very much. It was a very insightful answer for us, and mainly the sandbox approach is maybe a little different. So maybe I'm very curious about Ali Sanbey's answer also on this side.
Thank you. It's interesting to talk about your questions. You mean the tensions between the regulators and the innovators. And I want to refer to the previous sections. Cembey, an industry professional, yes, an old-fashioned professional. He talked about the old-fashioned trading board, the order book that yes, we write with chalks. Now, in the same industry, I'll say the old faces here, we are talking Web3. We are discussing Web3 with the old-fashioned trading board that we write on chalk. That's why the tension is normal. But
of course,
as in your previous questions, when we talk about investor protection, the concept is very clear. First, when you issue a product, when you sell a product to someone, you need to have a prospectus. You need to explain to the public that what you are selling, what their rights are, what are your responsibilities. So, following the prospectus, you need to make the continuous public disclosure. Even you are selling a share, a certificate share, a dematerialized, say it in a custodian, or you issue a token, you need to make this prospectus and continuous public disclosure. These are the musts. So then this is the primary market things that you have to consider about the customer protection. When we come to the secondary market, what should be done? Customer onboarding. Of course, if you are dealing with customers, you have to onboard the customers with the related know your customer rules, anti-money laundering regulations. After you onboard the customers, you will receive orders. You transmit these orders to the market, or you internalize these orders. What you have to do, you have to have the right order handling rules. It doesn't matter if you are trading a token or if you are trading a physical certificate. You have to have proper order handling rules, and you have to do your best for the best execution of the customer orders. You have that obligations. And you have to prevent the market abusive activities, and you have to surveil them. You have to report them to the regulator. When you come to the custody side, you have to safekeep the customer assets. You have to segregate them from your own assets. So actually we have seen many examples of that. MT-GOX in Japan in early years, TODEX in Turkey, and FTX in US. So here comes the proof of reserve requirements. If you do custody business, you have to do the proof of reserve to your customers. So to sum up, actually there was some tensions, but from now on I don't think that there will be more tensions.
Exactly.
You are intermediating a financial product. Actually, the innovation, we are talking about the innovation, tension between the innovators and the regulators, but here the innovation is not related with the trading. Of course, the trading is more speed, you have more applications, it's easier, but there's not much innovation in the trading. The product itself, the products you produce using the blockchain, the innovation should be at that side. The other side, the trading on the trading platforms, is not only 10, 20 years ago. It was the same 200 years ago. You know, the stock exchange business is not a new thing. So rather than talking about the price movements, we need to hear solutions related with the tier one, layer one coins and their paper, the proper use of their tokens. If you consider Terra Luna as an innovative instruments, that's not an innovation. It's the same thing, abusive things we have seen 20 years ago, 40 years ago. So the basic things relating to the issuance and the primary market or the secondary market are the same, and the tension that you mentioned between the innovators and regulators will find a way and get smoother.
Exactly. Thank you very much. As you mentioned, there should be a tension between innovators and investors, but at the end it will reach a smooth environment, because as you all mentioned, and both of you as mentioned, there are so many parameters that we need to consider when we are doing regulations or when we are trying to be in line with the regulations. So at the end everything will find a way for a smooth time. So for the last 5 minutes, I like to jump to my last and third question. It's going to be about the future, of course, your future perspective, your strategies, your considerations. So from now on, looking forward, what single regulator development in the next years, let's say 1 year, 2 years time, do you believe will be the most transformative subject for the digital asset industry? And what actionable advice will you give to the business preparing for it? Is it going to be tokenization? Is it going to be CBDCs or something else that we don't know right now? Maybe again this time we can start with you, Christine.
Sure, thank you. Yes, I think actually tokenization and stablecoins, although they're already out there, but we're seeing a growing number of regulators enacting regulations for stablecoins and tokenization. Tokenization and stablecoins anyway have similarity, which both of them are basically tokenization of an asset, and the asset could be fiat currency, or it could be real estate, or could be a commodity or equity. And this is and we're seeing that across in the US. They're starting now in MiCA in the UAE. We have last week, we have actually all our regulators have already issued for stablecoin. We have the Securities and Commodities Authority issuing consultation on tokenizing of bonds and sukuk, and VARA, which is a dedicated actually regulator in Dubai called Virtual Asset Regulatory Authority, has issued 2 weeks ago a revised framework for including chapters for stablecoins and real world asset tokenization, signaling basically the growing importance of this. But why it's just transformative is because, as you mentioned, Ali, is that these are actually not new concepts. They are new in the sense that they embed the technology, the blockchain technology in them, but they're not new because these are securities after all. So the having the regulations there is really helpful for the industry because it explains how this process would work, and it embeds tokenization in the core backbone, like legal and operational, basically fabric of financial markets. And in terms of what advice really to give is, I just want to say one more thing. It's a transformation also not just for digital asset players, but also for existing traditional institutions, because existing traditional institutions now have other counterparts, which are in the digital asset space. They also have competition in some ways because they may also take more of an interest in this space, because we're talking about, earlier mentioned the settlement being in minutes rather than in days. You have a wider inclusion for certain currencies that maybe in other jurisdictions certain individuals don't have access to via stable coins. You maybe have more liquidity in a real estate, or you can access a real estate that you wouldn't have been able to buy via the tokenization. So that's a transformation there. I mean, the advice to give to the industry would be maybe think what is your role in that life cycle of tokenization of stablecoin, and upgrade your legal and regulatory infrastructure, because the regulators are viewing these as existing financial market and capital markets product, if you are issuing a token on a bond, fixed income rules will have to apply. And finally, engage with the regulators early, and good luck.
The future, we are talking about the future, but the future is now. So
yes. It's just basically enlarging the future.
Thank you, Christine. Please.
Thanks, Christine has mentioned the tokenization in a comprehensive view. That was one of my answers also. Tokenization is the future. So I will not give more details. Actually, the institutional investors should be mentioned here, and it has been mentioned in the previous sectors, because each day we see many famous banks entering in this industry, fund managers like BlackRock. They are very important for price stability, and they will contribute to the legal and operational structure, because they will demand, they are professional, and they will demand more clarity and force the implementation of the current law and the structures. Institutional investors will play an important role for future. And last thing that I would like to mention is that as a regulator, I would really curious about and wondering the US regulation, because US generally dominates the international organizations such as FSP, ISCO. MiCA was very predictable. It was conservative in the European type, and was very predictable. But I really wonder the US regulation, and for the world also, US is a keystone that to follow. Actually, the ETF approval of the SEC was a keystone for the maturity of the crypto assets. When SEC approved the Bitcoin crypto ETFs and Ethereum ETFs, we understood that the connectivity between the traditional finance and the crypto asset sector is on the way, and no one will going to change it back.
Exactly.
And the US regulation, which is underway, if had some issues and it's some different topics other than MiCA, that would change the way for the future. And our time is limited, so.
Okay, thank you, Elisan Bey. Yes, institutional investors and US, I think, will play a major factor in the shaping of the future. I totally agree with both of you, of course. Thank you, Elisan Bey. Thank you, Christine, for sharing your valuable insights today. And of course, a big thank you to all of you in the audience for joining us and contributing to this important discussion. We hope that you find this session enlightening and inspiring, as we all did. Please enjoy the rest of Istanbul Fintech Week, and please do not miss the Pioneers of Digital Finance Award program. Thank you.